will assist you to also identify some of those areas that if you don't want to lose money in your contract, you need to pay special attention to how the life cycle connects, but also where are those gaps within the process that things will not go right? What are those areas that we have some of the disputes, right? So then we can start. So in the life cycle, it has 3 stages, right? You have the pre-contract stage, you have the execution stage, and then you have the post-contract stage. Those are the 3 stages that make up the life cycle of a contract. Each and every one goes through the same, right? And then in your pre-contract stage, this is where you will identify the need, because you can't start a project or a contract if there is no need, right? Yeah, so once your need has been identified, it means you now need to start the process to draft your scope of work, right? So in the scope of work, this is the first area where normally when we don't have a properly identified scope, we are going to have a number of issues during execution, but we'll explain that, right? So once your need is identified, you draft a properly defined scope of work, right? Your scope of work gets approved. Now, once you have your scope of work, which has been approved, the next stage is for you to get the suppliers or to get the consultants who are going to do this construction project that you have, right? So there are 2 legs that are normally followed in this process, because remember, as an individual or as a private company, you don't follow the same tender process that government follows, right? If you're an individual or you're a private company and you want to start a construction project or you want to start building a house, as an example, you go, you get the builder, you get your number of quotations, you have a contract with the builder, you implement, right? For the private companies, what you need to understand is there are legislations in place that you need to comply to. So individuals and private companies do sourcing differently from government, right? So what we need to understand that in government, whether it's Department of Public Works, whether it's education, health, or the SOEs that are in government, when sourcing gets done, where you are looking for a supplier or you're looking for a contractor to do the work that you have scoped, it has to follow a fair process, it has to follow a transparent process. Hence, National Treasury has been brought in, where the National Treasury puts legislation in place, puts instructions in place, put guidance notes in place to say, this is how in government we are going to do procurement, right? So it goes through the tender process, right? That's all I will explain at this point. We will still create a specific video where we deal with the entire tender process, right? But for purposes of understanding the life cycle, is to say, once you get the submissions from the market, as you went out to inquire in the market and requested proposals from the market, as soon as you get those bids, the next leg is your bid evaluation. So in your bid evaluation, you then assess to say, from the specifications that you have, from the requirements that you have, which of the bidders make the cut, right? Which of the bidders is considered successful? So it goes through a process of evaluation. So normally in that process, you will check the compliance, if that supplier meets all the compliance requirements, if you have BEE requirements, you check it. If you have CIDB and the levels that are in the CIDBs, you check that. So whatever requirement or permits in terms of compliance that this supplier needs to have, you check that and you tick that during the evaluation stage, right? And then also in the evaluation stage, you could also then look for what is the previous experience for this specific supplier. Have they done this type of work before, right? Were they successful in their previous projects or in their previous contracts, the track record and all of that, right? So you evaluate them based on their ability or capacity to provide the works, right? So they've ticked compliance, they tick the experience to say they have done this, they can do this, right? And then normally the other leg that you will look at is any other requirements that would have been put in place, either from technical, either from localization and all of that, or so it needs to tick technical, it needs to tick the experience, it needs to tick the financial, to say based on the proposal which they have submitted and your budget that you initially had, because remember when you go and into the market, you also have an idea to, or an estimate to say how much should the scope be done for, right? So when you do your evaluations, you also check the financial component to say, does it make sense? Is it within, or does it require negotiations, right? Then that leads us into the second leg that deals with negotiations. Remember, we are still in the pre-stage, right? Then in negotiations, let's say from the suppliers that you've received, there's a few of them that you are considering or that have ticked the boxes, right? Now you start your negotiations. Then what you try to get in your negotiations, remember, negotiations are normally you give, you take, you re-evaluate, and you come to a certain level of understanding to say, okay, we are agreeing on this, we move forward in this. So all of that happens in the negotiations. I said the scope of work is the first leg, where normally if it's not properly identified, you are going to have issues, right? Now I want you to also note to say in negotiations, it's also the second leg that normally will bring issues down the line if negotiations are not done properly, or if we over negotiate, where the supplier over commits, right? And then when it comes time for delivery, we don't then meet what has been negotiated. Because remember, once you negotiate and agree on something and it gets minuted and it gets put into the contract, that becomes the agreement. So hence the negotiations, it's one of the other elements that can expose you during the execution stage, right? So negotiation is the second leg. We'll also do a separate video that deals specifically with negotiations, right? And then once you've negotiated, the next leg that comes now is to take all those terms, all those conditions, all those compromises that you've made, or the cost reductions that you would have made. Because remember, if you had submitted a bid at a certain amount, and then following the negotiations, you've dropped some of the rates, you've dropped some of the things that you initially submitted your quotation on, we take all of those compromises that we have agreed on, right? And then we conclude a contract. So all of that comes into the contract. We get the contract signed. So what I want to indicate at this level is also to say, please always make sure that whatever has been negotiated is also documented, right? From your negotiations, you should have minutes of meetings from the negotiations outlining what is the outcome of the negotiation, right? And then when we get into the contract drafting, we bring whatever elements came from the negotiations into the drafting of the contract, right? And then before you sign the contract, you also review to make sure that what you initially tendered and what you then negotiated is clearly outlined and coming correctly from your contract document, right? So then you have your contract document, you review it, it's signed, it's done, right? You have a legally binding document which is mutual between the employer and the contractor. This is what the parties want to happen, right? We tick that. So then that closes your loop for the pre-contract stage, right? And then we move into your contract execution stage. Now, this is normally the longest stage. Let's say, for example, you have a 3-year contract. The pre-contract stage could have taken you a few months to conclude, right? To test the market and conclude. Now, your execution stage is for the period of the contract. So if it's a 3-year contract, it means your execution stage will take 3 years, right? Now, in most of the construction projects, you have to start with the administration even before you get access to site, right? What does this mean? Before you enter most of the sites, of the construction sites, you need to have your safety file in place and approved. Normally that can take time or cause also delays for you to start, right? Because you cannot start your construction until your safety file is approved, right? So even if you have the contract and you've employed people and they're ready to work, you cannot get access to site without a safety file. And each site has its own requirements, or each project will have its own requirements as to what they want to see in the specific safety file. So it is compulsory. You cannot start any construction project without your safety file in place, right? And then in most sites, you will also need to do inductions just to understand the safety and hazards within that specific area where you're going to do your project, right? So this is the start of your execution, where you get your safety file, you get your inductions. And then some contracts, as much as it's a 3-year contract, you'll find that for you to start working, you need to issue task orders, right? The contract manager needs to issue task orders and issue you with instructions and give you access dates to say, okay, for this specific work, you'll be here for 3 months. Maybe you're doing an outage, maybe you're doing maintenance, or maybe you are a QS professional. You come for a specific period to do what you need to do, right? So they will give you a task order or give you an instruction to say, we need you to access site from here and start working, right? So that's some of the administration that you will do in the beginning of your execution leg. And then the other thing that you need to note is, this is where you'll start employing your people if you haven't already done that. This is where you will start procuring your material and actually then start what you've been contracted to do, right? Then the next leg, so that deals with the administration. The next leg then becomes monitoring, right? To say, okay, how are we going to monitor that you are doing the right things, right? There will be progress meetings that must be held, right? There will be site meetings, there will be inspections as part of monitoring, right? And then One of the other things that is key within the monitoring space, because remember, in this period we are communicating, we are writing each other emails, we are writing each other letters, right? How we keep our records is key. How we document our letters and document our emails, the minutes of meetings that we have plays key, right? So this is the third area. Remember I said the first area where we have a gap is the scope of work, right? The second area where we have the gap is where it's in your negotiations, right? And then the third area where we have a gap, or areas that most of those projects or contracts that don't end up successfully, is we mismanage our records, we mismanage our documents. Lesego is storing the information in her laptop, right? Tomorrow the laptop is stolen, the information is gone. When we have a claim, the information is gone. We cannot rely on those minutes that Lesego issued, or we cannot rely on that letter that Lesego issued, or we are looking for the instruction that was issued, we cannot find it, right? So how, as a contract manager, or how, as a business owner, you keep your records and your documentation, it's very, very, very important. I can't stress this one enough, because remember, I normally say we win claims or win disputes on the basis of the records that we've kept, right? So in the life cycle, when we get to this part on monitoring, please make sure your record keeping system is on point, right? I'll leave it at that. And then the next leg within the execution stage is change management. So remember, you have a contract which has a scope of work, right? But should there be any changes in the original scope, it becomes a compensation event, right? Should there be any change where you are adding new scope, where you are increasing the duration, where you are identifying things which were not previously identified in the scope of work, then addressed as a compensation event, or as a claim, or as a dispute, right, or disagreement. But most of the contracts will give you a process that you would need to follow, right, to say, in this specific task order or in this specific contract, this is how we deal with changes. You must notify me on this period and right? So on the issue, or on the topic of change management, we will also give a separate video where we go straight and zoom in to the change management, because normally this one gets most, it's this one, it's where most of the issues happen, because for it to be a change, it's something that should not have been included, right? It's something that should be new and so on change management, what you need to get for this purpose is, it is a change to what you have already committed on, right? Any additions to what has been agreed on is a change, and there's a process as to how we deal with the changes for each and every contract, right? And then we move from change management. Within still the execution leg, you have your payments. I know most people spend time in understanding the payment, to say I invoice on this date, I get paid on this date, right? So this one, most people know from the start, to say I'm gonna get paid on this and this and this. So payment follows from the change management within the execution leg, where there are dates where you will do your assessments. There are days where you will submit your invoices. In most cases or in most companies, they will give you an outline to say, this is how our invoice should look like. This is what you must include in our invoice, right? Whether it's a VAT number, whether it's the address, whether it's the company registration number. Each company will tell you the requirements which they want to see in their invoice, right? Where they have a standard. Or even to say, this is the email that you will send your invoices to, and we pay you weekly, or we pay you monthly, or we pay you at whatever interval that would be outlined in the cycle, right? So in the execution stage, if let's say there were any modifications that you have done and any changes in cost or time, gets also covered within the execution leg, right? Okay, so the last stage that we look at is the contract closeout stage, right? The post closeout stage. So you had a contract in the pre-contract stage where it was awarded. You've executed the works during the contract execution stage. Now you are at the end, right? So in the post closeout stage, we look at three things, right? The first thing we look into is your final account, right? And in the final account, it's also an area that we have most of the issues. This is an area which is a pain issue that you will need to look into, right? I've said in the beginning to say we have the scope of work, which normally becomes an issue where we have to deal with claims or where we have to deal with disputes. We have the negotiations, which is an issue where we are over negotiating, right? And then we had the change management process where I indicated our record keeping and how we store or manage our documents as a pain issue, right? And then we are in the final account. So in the final account, this is where, remember, in the execution phase, you've been getting paid, or as a contract manager, you've been making payments. But all that was progress payments, right? Hence they call it interim payments. You do the work, we do an assessment, we give you a payment. You do the work, we make an assessment. If there's an error, we fix the error in the next assessment, right? We didn't include something in this one, we include it in the next one, right? So it's progressive like that. But when we get to closing of the contract, we do a final account, which then says, for the entire duration of this contract, we owe you so much from retention. Over the 3 years you've been claiming CPA, we've paid you CPA up to so much, right? For the duration of the contract, you've been submitting your compensation events. For the entire duration of the contract, we have done variations or compensation events up to this value, right? For the duration of the project, you were submitting claims, and all the claims that we've paid to you come to this value, right? So this is where we conclude and summarize each and every transaction in terms of payment that we have done, but also payment that is left, right? To say, if we were keeping your retention, normally they say you would have a 10%. It's not all contracts that have a retention, but let's say in your specific one there was, we deal with it in the final account, right? So what normally happens in this period is, because there were movement of resources or changing of resources during the execution phase, you'll find that the contract manager that we are now closing the contract with is not the same contract manager that we started the contract with. Or the employer's rep, because remember the contractor also appoints someone who deals with the day-to-day management of the contract. So when we do the final account, you'll find the contractor's rep that we started with when the contract was initially started is not the same contractor's rep that we are now closing the contract with, right? There's been a change in resources, but it does happen in contracts, right? So the importance of our record keeping or of our document control comes back here, right? Because when we are closing or doing the final account, and then the contract manager says we owe you 500,000, for example, but then the contractor's team says no, actually you owe me 1 million, right? Now, to prove the difference between the 500 and the million, it goes back to the records that we've kept, because for the contract manager, it means you'll go back to the payment assessments that you've done to validate or to prove that indeed we are only left with 500, right? For the contractors team, the same. You'll go back to all the payments you've received and say, I can prove that up to here I'm still short of 1 million, right? So normally this is where the disagreements or the misgap happens, to say how we were keeping our records or documenting throughout the execution phase can either come to bite us or can either actually now come and save the business or save the company in terms of what you say you are owed. Because remember, in most of these contracts, if you cannot prove it, you can then not say you are entitled to it. And the only way you prove it is to rely on a fact, right? And how you prove your fact is by the evidence that you bring forward, right? So in the absence of your facts and in the absence of your evidence, we are just talking. It's not factual, right? So in the final account, it brings up a lot of issues, right? So even this one, we will create a separate video where we deal in depth with the final account, right? And then within the post-contract stage, it's where you deal with your defects liability period, right? Remember, you've built a house, you've given me the keys to the house, you said you've done the work all the way, I'm moving into the house. But when I move into the house, I start seeing cracks on the walls. My plumbing system doesn't work the way it's supposed to work, right? My electricity keeps tripping up and down. There's an issue with my electrical connections. The defect liability period helps in that sense to say, for the first few months, because remember, the period differs. Some might be 6 months defects liability period. Some might not have a defects liability period, depending on how the contract was negotiated or concluded, right? So it's not that each and every contract or task order will have the defects liability period. It depends on how it was concluded and if that element was included. But if it is included, then it means once it's identified that something is a defect, then the contractor will be called out to come and fix. So even if you have moved from site, because you did establish site in the beginning, you have left site because you've completed the works, once the defect is identified, you will be called back, right, to come and fix, right? And in the defects liability period, you fix from the contractor or from the builder's cost, right? So the builder means in his cost, when he quoted to come and build my house, he also took that into consideration to say, within the first 12 months or within the first 6 months, should there be any issues or defects identified, I will be called back to come fix without paying, right? So now in this specific period, what is key to understand is when something is a normal wear and tear, like it's normal that if I open this door a number of times it will get loose, right? It's normal wear and tear. We can not define it as a defect, right? But what is key is to understand is if something was intended to operate in this way, like your plumbing system was intended to work in this way, and it is not doing what it is supposed to do, we call you back to fix it. But we must first identify it as a defect, notify it as such, and then you come, you correct it, right? So, but if it goes beyond the 6 months, if your period was just 6 months, if it goes beyond the 6 months, then some contracts will have the latent defect, where it's a defect that we cannot identify at this specific point, but over time it comes up, right? It's something that we don't see immediately, but over time when we pick it up, it's late, hence it's latent, because it's a late defect that comes up later. So yes, defects, when we are closing the contract, we also need to put that in mind, to say it forms part of the cycle, right? And then the next leg within the post-contract stage is what we call the takeover or the handover, to say, okay, the scope was for me to build this house. I've built the house according to your specifications. Here is the key. Here is your occupation certificate. I'm done as the contractor, right? You hand over or you take over the project as the employer, also confirming that yes, this house, indeed it is done, right? But in this stage, normally, for us to be able to say the work is done, we go back to what? To the contract. We check what was specified in the contract, right? Okay, if it's a house, it has everything that we said it must have, it ticks all the requirements that we said it should have, we accept it. But if it does not, right? If it does not tick everything, meaning you've built but it's not what we requested, or you've built but there are things that you have not yet completed. Maybe you were supposed to also give training as part of this. Maybe you're still supposed to provide manuals as part of this. Maybe you were supposed to give as-built drawings for this project that you have done. Now it means for us to take it over, it must tick that, okay, it was done and training was done and all the as-buildings were done and all the everything that was indicated as a requirement has been met, right? Then we take it over, we sign it, done. Congratulations, you have successfully went through the life cycle, right? Successfully. Now let me summarize again to say the projects or contracts that normally go through this life cycle, like I said in the beginning, each and every contract in the construction industry goes through the same life cycle, right? And at the beginning, I said there are those contracts or projects that go through the cycle smoothly and make enough money, right? But there are those that go through the cycle and don't have the same success. And I've identified the gaps that I'm hoping for your specific business, or if you're a contract manager for your specific project, you will start putting your systems in place to address those gaps, right? We identified your scope of work, how you draft it or how you review it as a gap. Please, let's make sure we double check our scope of work, right? We've identified the negotiation as a gap, right? Please make sure that when we enter into negotiations, we do that correctly, right? You don't over negotiate or over commit or over promise. When it comes time to deliver, you cannot, right? We've spoken about the change management, where we say how we manage change, or change will happen in each and every project and in each and every contract. You will have a change, guaranteed, right? But how we deal with that change makes or breaks most of the project, right? So change management was another area we identified. We spoke to you about our final account, where in the final account we have issues, right? We spoke to you about the takeover, where we normally have the disagreements as to did you complete or did you not complete, right? Yeah, that gap. So those 5 areas, we will issue separate videos summarizing or explaining each one of them, so that you have the skill, you have the knowledge, you have the information, and then all you need to do is to apply it to your specific contract and see what difference it makes, right? So that in the past we would have explanations to say, I'm losing money in my contract because I don't have information, right? But in this day and age, information is accessible, information is available. So all it depends is, are we willing to implement the knowledge that is being shared and is being shared for free? Are we able to take the time and note and put systems in place and close the gaps where we are identifying those gaps, so that we also are managing our contracts peacefully and managing our contracts correctly? We also, as business leaders, are getting the success rate that we should be getting from this contract or from this project that we normally start with good intentions, right? So I hope you are learning. I hope you are taking 1 or 2 points from this. Thank you so much for being with us. We will see you in the next episode. Thank you.